Well, hello, everyone. Thank you for joining us today for another episode of Two Economists and a Lender, where we take a deep dive into some of the most important economic issues facing agriculture. I'm your host, Carly Jacobson, and once more we're joined with David Widmar and Brent Gloy from Agricultural Economic Insights, and today we're discussing custom farming. So whether you're looking to hire or be hired, we'll be discussing what you need to consider when determining the profitability of that decision. So we're excited also to have Rod Hartwig with us today. He's a retail commercial lender currently supporting large grain producers in Iowa. Rod has a great perspective, having worked with many different size operations, and he's seen a wide variety of custom strategies used. Brent, how about we dive right into today's topic?
Thanks, Carly. It's great to be back again this month. The weeks have been kind of flying by here, it seems like. So we're right back at it, and want to talk to you about something today, custom farming, and kind of how you should think about that decision, whether it be doing it as a service for others or hiring it done for someone else. And so we wanted to start with a simple little poll, which simply asks, which of the following activities do you custom hire on your farm? And you can select all of the activities that apply, so you can pick more than one. One of my favorite articles I used to always share with my students was written by a guy named Jim Collins, which you may have heard of. He's a pretty famous guy. He wrote a book called Good to Great. And he wrote a simple little column once called Start Your Stop Doing List. And it was written at the end of the year when we start thinking about New Year's resolutions and all the things you're going to do in the next year. And his point was simply, let's take a look and think about the things that we shouldn't do. So here's the results from our poll. And what we see is about 2/3 of the people are outsourcing a couple of things, either chemical application or fertilizer application, the most popular, followed by harvesting. So as you can see, we're all kind of doing some of this stuff already, and so what we want to think about is kind of how to think more clearly about that. And just to give you an example, we all insource and outsource stuff, and some of us have had to insource haircuts. And now I'm fortunate I don't have much hair, I guess, in this framework, so I didn't have to worry about it too much. But sometimes that outsourcing is actually a pretty good idea, especially when it comes to something like your haircut. But let's go ahead and start thinking about insourcing and outsourcing. Like I said, we all do things. We all do some of this. And I think it comes down to a couple things. But one of the things that you want to always remember is, what's your advantage? What are the things that you think on your farm absolutely you have to do in order to get your advantage? And what are things that maybe someone else could either do better maybe than you, or do more cost effectively than you, or allow you to free up some time and capital. And time is always, I think, our most limited resource. It's the one I know I'm terrible at it, thinking about how to best use my time. But we all outsource and insource lots of different things. Think about accounting or tax preparation. A lot of us do that kind of stuff already because it's just not a good trade-off of our time. And one of the things I was thinking about the other day as I was preparing for this is payroll. Payroll is something I do on our farm myself. And it's the thing I absolutely hate to do. And I need to get to the point probably to outsource it, because it's not probably a good use of my time, and someone else could do it a lot more cost effectively. So let's go ahead and think about what are the categories and things that actually factor into the custom farming decision. I think there are about 4 of these things. One is, clearly labor capacity. Do you have the labor resources either in excess, where maybe there are some things that we could get those people doing, generate a service income for our farm operation, or maybe the other side, the converse, is probably true for a lot of us as well. We don't have that labor capacity, and so just doing some of these things makes us, stretches us really thin, and we can't get it done as well as we need to get it done. So that's one of the big factors. The other thing is quality and timeliness. Making sure if we're outsourcing it, I think one of the big pushbacks to outsourcing a lot of things is just worry about, one, is the job going to be done as well as I can do it? Or is it going to be done in a timely manner? And are there things we can do to structure contracts and whatnot such that we get the job done when we want it done and at the quality level we want done? Of course, we also have to think about, another thing to think about are relationships. Maybe this is an opportunity to, one, build a relationship with someone else. Maybe we do some custom work to help build a relationship with someone so that maybe in the future, maybe we could rent farmland or build a deeper relationship with another farm business or our neighbors, or maybe we give someone else a chance to do some activities to help them build their business going forward. And then finally, cost is always one of the biggest considerations that we think about. And here I think it's really important that we maybe dig just a little bit deeper on the cost side. So I'll turn it over to David to talk a little bit about costs and show us the next visual.
Well, thanks, Brent. It's great to talk about this. I've been looking forward to this webinar for quite a while. And as a bit of a background, when I was at Kansas State University, a professor in farm management there, Dr. Bob Burton, some of you might be familiar with Dr. Burton, he said early on in Ag Econ 303, which was a farm management class, he knew of a farm in western Kansas that had many thousands of acres being raised, and they owned 0 tractors. And, as a 18, 19, 20-year-old, I thought I knew a lot, and that just blew my mind, and it stuck with me for a long, long time. And, I followed up with him quite a bit on this, and I learned, the rationale here was that this individual believed that they could hire the activity done from people in the community and in the neighborhood for much cheaper, significantly cheaper than they could by owning the equipment themselves. And so as an economist, I find this, what is the cost? What does it cost to operate our machinery? What does it cost to have someone to hire to help us out? I find this cost question really interesting. And what's going on here is there's several moving parts that we have to keep in mind. And we talked about machinery ownership cost in a previous webinar. If you're interested in that, you should check that out. It was a few months ago. It's still very relevant. And we've broken this out into 2 components to think about this. The first big bucket is machinery ownership, and that's the fixed component. It's here in orange. And, the biggest part of this is depreciation. There's also interest, taxes, insurance, but there is a cost of, having that piece of equipment in the barn for a given year. The other side of this is the operational cost. And this is the cost associated with actually planting an acre or harvesting an acre. It's the labor, the fuel, and the repairs, the wear and tear covering every additional acre. And so if we think about it, our total cost for operating a machine is the combination of those 2 things. Now, first thing we got to think about is, if we want to harvest, we're going to have a total cost. That's our operational costs and our ownership costs. But every farm is going to have a different total cost. They're going to have different operational costs. They're going to have different ownership costs. And if we think about this, some of the big custom harvesters, for example, probably have a significantly lower operational and ownership costs on an acre basis. They're very efficient. They're covering a lot of ground. They have a lot of support equipment to go along with them for that. So we each have a different total cost. The other part of this is how do we go about pricing custom services, or how does a neighbor price out their custom service that they're offering to us? And as an economist, I find this part interesting. Typically, that price range will be somewhere between a little bit above the operational cost to all of the ownership costs and a little bit of return on top of that. And so the way you can think about this is that there's probably a price range that you're willing to help out a family member or a neighbor to harvest a few hundred acres of corn that maybe they're a little bit behind on. And you're probably going to say, I just need my labor, my fuel, and repairs, and a little bit of money out of that. On the other hand, you can't cover that. You can't do that over a large scale. Another example to share is it's pretty common in my experience in Kansas for someone to buy a piece of machinery a little bigger than they actually needed. And to help cash flow that, they would take on a little bit of custom work. And so they're not necessarily looking to cover all that ownership cost. They're looking to cover all their operational costs and get a little bit above the operational to generate some contribution margin, some margin there that they can then apply to the debt that they're servicing or just the overall expense. And so when you think about how can somebody do custom work at such a high level or a high expense or such a low expense, a low price, you got to keep in mind we all have different total costs, and we're all looking to capture a different amount of that total cost. Some of us are willing to subsidize it, or some of us need to capture all of it and then some.
David, I think the key thing in all of this discussion is, in order to make a good decision on custom harvesting, either to do it for someone else or to hire it done, we have to really understand our costs, the ownership costs as well as the operational costs. The operational costs are pretty darn easy. The ownership costs are a little bit harder. And if you watch if people get in trouble doing this, it's because they didn't really understand the ownership cost side of the equation. So if you do this at scale, in other words, you do a lot of acres of it, if you price it below that total cost, you will run into big trouble, okay? And on the converse side, how can we evaluate an offer of custom farming if we don't understand what our costs really are of running our equipment and owning our equipment? So really understanding those costs is just absolutely critical.
And yeah, and so going back to AgriCon 303, what I learned there is that there are a lot of producers out there in this particular area. I don't know where it was at, but they were willing to do it for something less than total cost, and that was a reason why this particular non-tractor owning farmer was custom hiring so much of that activity done. So the second thing that always comes up when we talk about custom rates are benchmarks, and there's a lot of benchmark activity. This is typically survey based. In fact, it's usually always based on a survey, and they might make some adjustments from year to year based on fuel prices or some different changes. But I didn't realize how popular these were. I knew Kansas State had a really robust offering. They even get into activities such as custom fence building, all sorts of activities. Nebraska has one. Iowa State has one. We got to always look at the dates. Iowa State has one that came out earlier this year. These are sometimes viewed as the gold standard, and I think that's really helpful. But thinking about this cost equation that Brent told us about earlier, unfortunately, I think a lot of people only look at these, and we don't actually know what our own costs are. So it's a helpful starting point. The second thing to look at is if you're using this, especially if you're offering a service, you really need to get into the details. And I just showed the first page of the Iowa State survey. You can see there's about 3 or 4 paragraphs of disclaimers and telling you how they came about coming to those numbers. I'm going to show you another chart. You can see a little bit bigger. This is coming from the Nebraska survey. And there are a lot of numbers posted in all of these surveys. If you start looking across all the universities, they have a lot of numbers. There's an average rate in Nebraska. There's the most common rate. There's a range. And there's also the number of survey reports. And you really need to dig into those numbers, and you really need to understand what's going on with those. And so I'm looking at the chisel plow rate per acre. The average is $14.45. The most common is $18 per acre, and the range is between $8 and $25. And so this is one that you might look at the average and say, there's no way I would do this for $14 an acre, or I would do this for a neighbor for $14 an acre. And you start looking at the data, and you really got to dive into this. So actually, the most common number is 18, and there's a big range here. And it goes back to that chart I was showing you earlier. Some people are doing it just a little bit above their operational costs, and some folks are looking to cover all their total costs and get a return on that. The thing that, as an economist, I think is really important to keep your eye on is look at the number of actual reports. And so there are 11 reports collected in this survey. So that's why we see a little bit of variability here. So always go beyond the numbers there. These surveys are extremely helpful, but they're just a starting point, and you need to know your own costs. So let's talk about a few other factors that Brent mentioned. Labor, you really have to think about the labor constraints. One of the issues, in addition to everything Brent talked about, was the seasonal versus year-round. And so we have a great employee and we want to keep them busy year round, we want to make a job for them that's year round, we might be looking to bring in some of the things that we weren't currently doing. The things we're currently outsourcing, we might insource. Or on the other hand, if we have a labor shortage, we might just try to figure out a plan to bring in seasonal help. Another very common, but it's not, excuse me, not well documented arrangement are family and neighbor agreements. And so maybe you work with a neighbor or a family member and they're doing some planting for you and you're doing some fertilizer application, or maybe it's on the haying, or maybe it's on harvest. One brings a combine, the other one brings the trucks. These are very common. And if you're engaging in these, you really have to make sure that it's penciling out for you. You want to make sure that we're truly comparing apples to apples. And these are very, I think they're very critical arrangements. We just got to make sure that we're doing them in a way that's panning out for us. We got to know our numbers and our costs. The third point is transitions and transition planning. Maybe if we're looking to retire, we might not make that investment in that new planter or that new combine. We might have a neighbor help us out. We might actually just let a neighbor take on some of these activities. Or if we're thinking about the next generation, we might ask a neighbor who's looking to expand and get their start. They might ask them to take on some of our activities. Or if we're looking to bring on another family member into the operation, that next generation, we might bring in an activity that we were outsourcing. And so there's a lot of factors that come into this, and there's a lot of moving pieces, and we have to keep that in mind. Timeliness and the quality of the job done. Spraying and silage chopping are two that always come to my mind when it comes to timeliness factors. It seems like spraying can go both ways, right? Or even fertilizer application. The scale at which some of these large custom operators can do it and the labor network that they have, they can sometimes get across our acres in a very short amount of time. But if there's a long queue in front of us, a long line of producers ahead of us, it can be frustrating how long we have to wait with beautiful weather and nothing happening in our fields. The other one, silage chopping. I grew up in eastern Kansas, and it was interesting to see the transition when folks were out chopping the silage by themselves. It was a very labor-intensive process. It took several weeks, if not a month, of out chopping silage. And then, I think a lot of people rejoiced in the streets when the silage choppers started coming into town, and we didn't know how fast they could actually get how much they could get accomplished in a day and a half. And they'd bring their own trucks and they'd bring their own tractors to pack it. And it kind of turned into a fun sport to watch them come in and do all that work in such a timely way. And so we got to think about the timeliness of that. The third part, or the second part of this slide, is expertise. Sometimes there are just people who are really good at this and they can really help us out. And we've talked a lot about insourcing and outsourcing of machinery because that's what we want to focus on today. But this goes beyond that. There are a lot of other ways when we think about this. Soil sampling, agronomists, veterinarians, accountants, legal professionals, hair care. There's just a whole host of ways when we think about this insourcing and outsourcing. It's not just our machinery. That's an important part of our operation, but it applies throughout our entire lives. Even mowing the grass, for example. We were talking about this earlier. So Brent, you want to wrap this up before we get to Rod and our questions for him?
Sure, David. I think, the key thing to think about is, businesses change and things evolve over time. And what worked, in the past may not be the way to do it today. And at least we have to ask that question. And one of the things on the custom operating side we tend to see is the more specialized the task, the more common is outsourced, because people build expertise just unique to that task. And the other thing is where the fixed costs get really large, it requires a lot of scale to justify the equipment ownership. Likewise, it provides a revenue opportunity for some operations where we can make a contribution to those ownership costs and make it feasible for us to have the best of both worlds, have the equipment necessary to do our own work, as well as cover enough acres to make it pay for everything else. The other thing that we didn't talk about too much that I think is important here is to think about the idea that when we outsource things, we are taking long-term assets off our balance sheet. Okay, so it helps to kind of restructure the operation, increase your financial efficiency. Now, the flip side of it is when we do that, what we're doing is converting fixed costs, long-term fixed costs, into higher variable costs. And it's a trade-off, okay? And it kind of depends on your financial structure, but it's really important it can provide an important opportunity for some people to think about the structure of their business and get the most out of the assets. Invest in the assets that give you the biggest rate of return on investment. So where in your operation are the things you have to do? That's where you get your ROI. What are the things you just would never give up because you feel like you have a competitive advantage in doing them, versus things where maybe we can have somebody else do it or do it for someone else.
Well, Rod's our ag lender expert of the month. We had a great conversation in prepping for this, and Rod's got a lot of expertise. Look forward to having him share. In the next 10 minutes or so, he's going to share some questions that Brent and I have, and then he's going to stick around for overtime. So as a reminder, we have the Q&A feature turned on. You can type in your questions and share those. We're going to get to those after the 30-minute mark. So Rod, thanks again for joining us. Tell us a little bit about yourself. You're in Iowa, so tell us a little bit about the customers you're working with and a little bit about yourself.
Yeah, I'm with the Retail Commercial Lending Group, and I specialize in grain, and my customers are in the 2/3 eastern part of Iowa. They range from up to 32,000 acres. They average about 12,000 as a group. It's do a little bit of traveling, but these customers they're great managers, and they're fun to work with. And I love the stuff that you guys are talking about, especially when you start talking about costs and how to manage those and looking at your break evens and those things. We're very passionate about those things.
So help us out, Rod. We'll just start right there with the cost. We talked about variable and fixed costs. What are some ways that producers can start to get a handle on this? How can they dive into this? Because sometimes we put these in, as Brent would say, we put them in the too hard category, such as these ownership costs. How can we get a start on this?
Well, there's a couple ways. Number one is you need to know what your break evens are with everything that you do. So, put together some cash flows. We also look at fixed asset costs on a per acre basis, which would be like what's your cost of machinery on a per acre basis. And when we talk about fixed asset costs, that cost would be what your payments are, whether it be, your leasing or, your interest and principal. And what's that level and how does that work? And then apply that towards what you're looking at for your labor costs and your other variable costs. And then set a margin, and then setting that margin, and then that's how much you can figure, how much you can charge or how much you can pay. But with the stuff that you're doing on your farm or, whatever it is financially, you should always know what those break evens are. Look what your margin is and then set your price. As we talked about before, when you do it that way, you take the emotion out of it.
Yeah. It can be hard to have the discipline to sit down and do that. Or we do it and we don't update it over time, right? So we did it 5-6 years ago. Sometimes that momentum sticks with us, and we need to always be up to date on that. So what are some of the other observations that you've made about the operations you work with that do a good job thinking about what to insource versus what to outsource?
Well, there's a lot of different reasons why they do it. We touched on it a little bit towards the end. A lot of it that I see now are we've got another generation that's coming in these farming operations. Farming operations I work with, they're brothers, sons, grandpas. They're larger, but they're also family. And they're bringing in these younger family members, either to purchasing sprayers as a way to get them started, to generate some revenue. We have one customer that's even started fertilizer custom application part entity for them. So just different things to try to get this next generation in, because to go out and just buy more ground or doing things like that, it doesn't work that well. So the succession plan, I see it working great for that. Then on the other side of it, last year we had a really late fall. We had a really wet spring. So I'm seeing some of my customers are, they're actually bringing in people to do custom planting for them or doing custom harvesting. I mean, it's all about timeliness. We talked about that before too. So, but again, when you're doing that, you need to know what those costs are, what those break evens are, how that's going to affect your break even, because it's always going to affect your margin and it's going to affect how you market. So you just got to be cognizant of all those things. And that's what I'll say about this group that I work with and all our farmers in general, all of our producers. Think about the managerial skills that these guys have to have. Okay. Not only do they have to market, do they have to be the world's best producers, which they are. They got to think about things like labor now. I mean, labor is becoming a really big issue with some of them. We have to think about, things with the environment, how to keep the environment good. We're talking about succession plans, how to set up wills and trusts and all that stuff. So when I think about farming isn't just planting a crop and taking it out of the, for harvest. There's all these decisions that they all have to make. So, you talked about the experts that are out there that they can hire. I'm seeing more of that too, whether it be accountants, marketing people, agronomists coming in. I mean, just all the help that they can get. And they need that help too to make all these decisions.
Help with figuring out your financial side of your business too, as well, right?
Yes. And we're starting to see more of that too. We're starting to see more outsourcing, more advisors coming in to help them with their break evens and do cash flows and do those types of things.
And this is something, if you're thinking about either offering custom as a service or hiring more custom, something, sit down and work with your financial services officer if you have a lot of questions about where those break evens are, right?
Yep, exactly. And there's other you have us. I mean, we've got some tools that can help you with that, but there's also some really good advisors that are out in the marketplace that can help with that as well. So
Brent talked about opportunity costs. So you can bring this activity in, but it's an allocation of your time. So one of our last questions here, help us think about opportunity costs with respect to the fixed asset costs. And so if we bring in fixed equipment as a fixed assets in the form of equipment, what are the opportunity costs that we could face on our farm moving forward?
Well, you're going to be, it's just an extra cost you have out there. So there might be a chance that a piece of ground might come up. And if you went out and bought a $400,000 sprayer or a combine, you might not be able to do that. So there's an opportunity cost. Or maybe purchasing a finishing unit. There's different things that you got to think about. So that's why, when we talk about the succession planning, it's very, very important. So you can get your long-term plans on where you want to be, but you can also have the short-term plans on how to get there. That long-term plan may be, how do I get equity to this next generation? Well, that might be in the form of a finishing unit or maybe, like we said, bringing in a sprayer. So those different decisions that you need to make to try to help them to build that and to get going.
Yeah, that opportunity cost of the fixed asset. We have so much money that we can commit to fixed assets. And if we do it all in machinery, we might be holding ourselves back. So I have one more question before we turn it back to Carly and wrap up for our 30 minutes. One piece of advice that you can put on a billboard for thousands of farmers to see, what would that piece of advice be here in May 2020?
Have very good record keeping so you know what your break evens are and you know what your margins are so you can market. If I could do anything, tell them all that, and if it could go into their brains, that would be what I'd tell them.
That's a great piece of advice because as you mentioned, we talked today about knowing your costs so you can think about this insourcing versus outsourcing. As you mentioned, we'd also need to think about it for the marketing side of it. And so having a good foothold on our records and our cost of production, even if we have to outsource that activity to get help with that, is really valuable as we move through all of our decision making. I'm looking forward to getting through these questions. I saw a lot of good questions coming up. So Brent, what's the first one that you saw that you want to tackle?
Well, we got several of them. Let's start with, and I think this would be a great question for Rod. What metric do you recommend as a primary, and what performance do you like to see on that metric for making custom decisions worthwhile?
The metric would be, first of all, what's your total fixed asset cost that you currently have with your operation? How would buying this new piece of equipment affect that? Okay, and what's the revenue that's going to come in from this new piece? And how's that going to affect the overall operation with costs and everything? So again, it goes back to what are your costs? What's your revenue? What's the margin going to be from bringing that in? But you need to look at it that way, not just bring it in and kind of guess. You've got to look at the big picture and how it affects it.
Yeah, and I think another way of thinking about it too is, you've got this. Here's kind of the big picture one. I think another way to think about it is even at the individual operation level. Let's say you're doing spraying. One of the things I think you really want to track is, how efficiently are you using that machine? And for instance, what's the proportion of hours that it's spent operating versus idling? And that can kind of start to help you think about ways to make that more efficient. For instance, maybe we don't have enough support to keep that machine running as much as it should, and we could make an investment there to tender it faster or other things. And I think, if you look at like some of the harvesting is the same way, what proportion of your hours are you being efficient with that equipment as opposed to it just sitting and not running. So lots of things you can track all the way from like the financial statement level all the way down to the individual asset utilization, and encourage people who are thinking about this to really start digging into how efficiently are they able to operate that equipment. Another one, what recommendations do you have in terms of separate entities if doing custom work with regard to liability, performance measurement, and billing, say a livestock enterprise for the custom harvesting operation? So I think one of the things that's useful with having separate entities is it allows you to kind of isolate your record keeping. It makes keeping track of that a little bit easier. If you just throw it in with everything else, it can be done, but I think you're setting up the structure with a separate entity from the start to kind of give yourself a better idea of what the costs really are and make it easier to track them. In terms of legal and liability issues, I'm not a lawyer, so I can't give too much advice there other than to say that, I've been told that that's a wise thing to do, but I don't, I'm not a lawyer, so I can't comment too much on that.
So the thing that I would add is that it could be very helpful, as Brent said, but if you have two entities that are side by side and one of them is providing services to the other one, you can make the numbers say whatever you want to say.
Right.
So you can make the crop operation look super great, and you're going to show a loss on this livestock, if this is the example, right? Or you can push it away. And so a lot of times it can be a very helpful activity to allocate these fixed costs. But at the end of the day, step back and realize that you could allocate them the other way too. So you have to keep that in mind.
There's always.
Go ahead.
No, go ahead, Rod. I mean, interrupt.
I'm a big cheerleader of enterprise accounting. So if you can break it down on an enterprise basis, that's the best, because how else do you know if you're profitable in one area or not?
Right, and the allocation issue is always there, and I think those allocation decisions we make, we just have to do the best we can, and I think, but we always have to do it. So make sure we do it in a way that's going to give us meaningful information, as opposed to just doing it to say make one look good or the other not. And unfortunately, I think sometimes there's not enough, as David was saying, thought given to the actual allocation decisions. What kind of break-evens do large farmers, 12 to 30,000 acres, have on the corn and bean side? Are they really making money?
I suppose you want me to tackle that one, huh? Well, it's real funny that question would come up, because right now I'm putting together some benchmarking and stuff for my clientele, and there's about 27 people that are in this group, and as I mentioned before, they're up to 30-some thousand acres. but we are definitely finding that they do have an advantage with the break evens. They are lower than we have in the rest of our pool, and it's in some cases it's significant. And a lot of it is they're low cost producers. They really are. My top 25% in this pool that we're looking at, their working capital is over $400 an acre, and one of them is up to 30,000 acres. So that kind of gives you an idea of what they're doing. I mean, they are profitable. They're making money. But the one thing that I will say that's very common with this group, we talk about the finances and we talk about the record keeping and we talk about the marketing. About 70% of this group does that, and that's why they're doing what they are. I mean, they know what their numbers are, and the ones that are successful, especially, they're successful because of it.
And I'll just throw in my answer here. And what I always like to tell people is that I don't think it's so much about size. It's not
Right.
People are profitable because they have a lot of acres. That the economies of scale in farming, in my opinion, and I think the data would back me up on this, I'm quite confident of that, is that the cost curve flattens out very rapidly. And so in other words, the costs don't continue to decline with size. So that means you don't have to have
Right.
a lot of acres to be successful. And I think that's an important thing to remember. The other thing I would say is that profitability is I want to say it's equal not everybody in that size category is making money. There's no way. And
Right.
there's not everybody in the small category is losing money. So there's always examples of people at all different size levels that are doing very well and ones that are not doing very well. And so I think it's important to realize that comes down to a lot of factors that drive profitability, as Rod and I were talking about earlier. There's just a wide range of them. But the things that you can control, your decision making, understanding your cost, as Rod is pointing out, and doing a good job of marketing your crop, are things that we can all do. And I think that's really important to remember.
So I'll kick off the next question. It said no mention of leasing combines versus purchasing. Days of use are very minimal for the expensive asset, plus all the headers needed. And we need bigger. We need to build a bigger machine shed due to the heights of the combines. And so, yeah, it's great. The question is very insightful, right? So we have this slippery slope, right? We buy a combine, you got to get a head, you got to get a bigger building. And so I guess I'll kick this off with the response is that, you start off with, I'm going to do this one thing, and then you're going to escalate. I remember in college, I had a friend came back from spring break and said, hey, we were going to go buy a new sprayer, and we got this new sprayer bought, but then we started spraying and we realized we needed a bigger nurse trailer to haul water because the sprayer was so much more capacity. And so we always got to keep in mind the big picture of one piece of equipment can kind of escalate into a whole new barn by the time we're done with it.
It's a great point. In terms of leasing versus purchasing, I think maybe, you correct me if I'm wrong, we might have a webinar coming up at some point. I know that was in the queue of things to talk about, lease versus purchase, because that's a whole nother decision besides custom harvesting, and it's something I think you will see people looking at more regularly. But the idea is, overall, in terms of back to the custom farming or not, we're owning a very expensive asset. I mean, harvesters are very expensive assets. Even planters today are very expensive assets, very specialized, not used very much in the whole scope of the year, but really, really critical to the farming side of it. So I think sometimes we get ourselves in agriculture, we have to realize that it is kind of a cyclical or seasonal business, and it's really hard. You can't. It's very difficult to operate that equipment, say a planter, all year long, unless you start in the south and go all the way to the north. And the same thing with harvesters. So there's going to be some of that that's happening regardless. But it comes right down to it. We have to understand what is that cost of owning that machine and having it do the things that have to be done on our farm.
Yep, and the thing about leasing too, you have that residual value. So you're going to be looking at certain hours that you're going to have on that contract. So you have to make sure, if you are a custom farmer, what those hours are before you jump into it. Because I've had a few of my customers that have been hurt because they put too many hours on their combine. So, but for others, I'm seeing a lot more of this, a lot more leasing. It works fantastic for them.
If you think back to that chart that I showed earlier about the operational costs and the ownership costs, leasing is sort of a hybrid. It's the middle ground between custom hiring and outright ownership. And if you're leasing the machine, you still have to think about those variable costs, the fuel, the labor, and the repairs of actually running that over the ground. Whereas the custom hire takes care of all of that, right? Someone else is worrying about that labor, that fuel, and that repair. So I think of the leasing as sort of the middle of the spectrum between outright ownership and custom hire.
Right, that's a good point. As purchase costs of machinery continue to rise, do you see an evolution toward several neighbors owning a higher dollar machine and doing it jointly? And I would say yes, I do. And I think it makes a lot of sense to do it. Why don't we do it? We got to work with the darn guys, right? And sometimes farmers are very independent. We don't like to do that, and it's hard. So we don't always do it, but it makes a heck of a lot of sense. So if you can find some like-minded people and get a system figured out where you can do that, everybody will benefit. But it's a coordination cost, and unfortunately, sometimes we make that calculation, I think, just initially without doing the numbers and just say, oh, we can't do that. I can't make it work. Well, what's it worth? And how much would we save by doing that? And I think as this equipment gets more and more specialized and more expensive, it just makes an awful lot of sense for neighbors to work together.
And don't you feel that that the customers that I work, like I mentioned before, they're family, they're brothers, fathers, sons. This is one of the reasons why they're large like they are, is they've combined their operations together because of the costs that are out there. So I definitely see this happening with neighbors too.
One of the questions that I saw that we can take a crack at is, how are the custom rates determined? And I know the Kansas State ones I'm very familiar with. They start with the survey, and they will update that survey every few years. But in the interim, they will make some adjustments for, hey, fuel prices are higher or lower and these factors. They do a great job of trying to estimate that. But you should really read the full text. Don't just jump to the one page that says, here's a number, and write it down and off you go. You should really be a good consumer of those. They're usually survey-based with some updates. The other thing that I noticed preparing this is that Iowa State had 2020 numbers where Nebraska and Kansas were a few years behind. It can be very helpful to triangulate amongst those. So hey, K-State was here 2 years ago. Iowa State's here today. How has Iowa State changed over the last 2 years? That could be a way to use kind of the K-State base plus an adjustment. And so those are really helpful tools. We just have to make sure we're using them the right way.
I see another one. How do you define a good job marketing?
Well, I can start. I think a good job of marketing is knowing your cost of production and being able to make decisions, or make marketing decisions, and make marketing opportunities happen, or take advantage of marketing opportunities when you can reach your financial goals, whether that's a certain return over a cost of production, or you have to define those goals. And so I think a good marketing decision is knowing your base, knowing your goals, and having a plan that allows you to execute on that as you go forward. So that's a pretty broad level definition, but I think marketing is different for every organization. Sometimes you want to market after you get it harvested. Some groups or some farms want to market before harvest. And so there's a lot of tools and a lot of timelines, but you got to think, what are my goals and how am I going to execute on those goals?
Yeah, I think it's important to think about, what are the goals of your marketing program and what are your financial goals? Are you making the decisions that are required to the best of your ability to get to that? And in retrospect, I think too often we judge, and it's not just marketing, it's almost every decision we make. We judge it in retrospect, okay? Given what happened, did we make the right decision? And I think that's a poor way to do it, because what happened is one of a gajillion different things that could have actually happened. And I think that's why sometimes we get really frustrated and say, oh, well, I just really screwed up my marketing this year. Well, yeah, if we knew what the future was going to be, it would have been pretty easy to make the right decisions. But I think we have to evaluate it. Given the information I had when I made that decision, did I make the best decision possible? And I go back to this framework that we put out maybe it was a couple webinars ago with the OODA loop. The observe your situation, get yourself oriented, make a decision, and then act on it. And David and I both talked about one of the things I know that I don't do very well is I'm really good at observing the situation. That's what economists do. We're really good at observing the situation and orienting ourselves and telling all the different things that are happening in the economic environment. I'm really, really good at that. Sometimes, though, where I think stop is making that decision, and it's sometimes referred to as an analysis paralysis, right? Really good at analyzing, but not getting that decision and making it act. I use the example of the pocket veto, right? I mean, the president doesn't really want to veto it, but if he just leaves it on his desk for a certain amount of time, it just goes away, right? And it had the same impact as a veto. And I'm trying to get myself out of stop pocket vetoing stuff and just letting stuff happen. Make a decision, the best decision available with the information you have. So I'm sorry that was a little bit of a long-winded decision on what a good marketing job is, but I think it's too hard. It's not a question we can answer easily. So you can't just say, well, you got X price for your corn. No, the reality is nobody's ever, there's very little evidence people can beat the market, okay?
Right.
And so you have to make the best decision for your business, make those decisions, act on them.
Yep, I would agree with that. I would say what a good job of marketing is waiting for the price. That's what a good job of marketing is not. No, again, going to just pound this to death, but know your break evens. Know what you want to have for a margin. And you might not be able to get that price at that time for that, but at least know what those break evens are. So if you don't start getting that price, you can start planning with that too. See a lot of people doing puts, using options, at least having a safety net for themselves. Some of those things, they cost a little bit of money, but when you compare it with what could happen, those are smart moves, because you can always roll them up. So but again, know what those break evens are and know what you want for margins, set some goals. That's a good job of marketing, and try to follow that plan.
How do you ensure timeliness? And so, going back to my AggieCon 303 example, right? If you don't own a tractor or you're outsourcing something, how do you go about ensuring timeliness when you're trusting somebody else to do this job for you?
That's a great question. It really is. And I don't really know if there's a big answer except for, squeaky wheel gets the grease, and, whoever shows the green gets it. That's
One of the things I would say too is there are things I think we can do. We can write that in the contract when we hire them, or one of the things I've personally done is, you know, it's amazing how powerful competition is, right? How powerful the idea of competition is. So instead of giving all of a certain custom activity to one person, it's amazing how, if you weren't happy with the time limits the year before, how much it improves if you give half of it to 2 people, or a third of it to 3 people, and see what happens. So, I think there are some things we can do to manage it, but at the end of the day, that's what it is. It's management. You've got to manage your contractors to get the results that you want, and we have to take a proactive, I think, approach to it.
That is one thing that I hear, though, is the timeless. I mean, they all struggle with it, and it's one of the reasons why they're buying their own sprayers and doing some of that stuff.
Absolutely.
That's a skill set that we're not necessarily, that's not inherent in agriculture, right? That's a completely different management skill set. Writing contracts and incentivizing and getting everything lined up. We're really good about investing our own time and making sure the job gets done, and we're good at changing bearings and preparing for the worst case scenario. It's a different mindset, and we got to really recognize that at the beginning.
And next month's webinar is on June 25th. David and Brent are going to talk about the importance of finding the sweet spot with debt use in your operation, which should be a great topic. So thank you all for being here on the call to help try to answer some of the questions and help us navigate this, the landscape, really. So that'll do it for another episode of Two Economists and a Lender. Thank you, David, Brent, and Rod, for just leading another excellent conversation. And thank you for all of you in the audience for joining us. So we look forward to seeing you online again next month.